This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:42 p.m. on May 5th, 2019. This is a very important, critical, strategic weekend webinar on the heels of some unexpected developments that have occurred since this afternoon. Full disclosure, this is purely for financial education, not for any solicitation or advice. Session will be recorded and uploaded to the Clueless Trading Google YouTube channel for further viewing by all members as well as anyone out there with the internet connection. Let me begin and keep this straight to the point. I'm not going to take very long. We're going to keep this short and sweet. Put out some roadmaps of what might happen on the heels of something what I consider to be extremely, at this point, on a short-term basis, as we can clearly see, with futures down approximately 55 points. That's pretty substantial. We are going to map out the roadmap of what might happen given this unfortunate events and the threat of further tariffs, increase of tariffs that was announced this afternoon, as you some of you who track my Twitter feed know by now, unless you haven't really known. President Trump has threatened to raise tariffs on Friday on $200 billion worth of Chinese imports into the U.S., as well as another tariff on $325 billion worth of Chinese imports, which would basically be the total of all Chinese imports and or exports to the United States. Bottom line is, apparently, and on a complete turnabout, because we have all been hearing talks are going very well. They are having a meeting of minds. There are issues they are coming closer to resolving on the trademark patent case and the technology transfer issues and stuff like that. And also President Trump himself, since the latter part of till the latter part of last week, and then his lieutenants, whether it's Larry Kudlow or Steve Mnuchin, Treasury Secretary and such, have all given a clear idea that things are progressing well, and also that we might be getting a China-U.S. trade deal, which would be extremely positive to the United States, to China, and globally, and to the U.S. financial market. That's really what we care about. And to the United States, of course, so we care about that. That it will be done by Friday, which would be this Friday, which would be the 10th of May. Now, this date wasn't picked by you and me. This was directly communicated from President Trump. Now, what happened exactly along the way, we don't know, but everything seems to have switched in 24 hours. And when I get my quick breaking news on my iPhone and I see this, I thought for a minute that I was seeing something wrong. This was this afternoon, approximately around 2 p.m. when it says he's ordered raising rates tariffs on 200% on $200 billion worth of Chinese goods, which were held back at 10%. Now it's going to go up to 25%, and that he's looking to, he's looking to maybe raise more on the rest of it. I said, this must be a joke. Well, it's not a joke. Now, there's nothing to really panic about because there's a high-level game of poker and what we call international macroeconomic game theory that's at play here. And what we do here as tactical traders, when these type of unexpected situations occur, just like in battle, we don't retreat. We look to map out the roadmap during these critical times. While the rest of the world might panic and grab and get deep into the bunkers and grab more diapers and sit on the side, we tactical traders who have been trading this market very successfully, including on Friday, not to mention we had a massive crash on Wednesday and Thursday. And like I said, on Friday, we went berserk. You saw that. This was the big move on Friday, right here, which generated substantial profits for many, many, many of our traders who were situated here, and capitalized on significant profits along the way. This was where we closed on Friday, right there, as we all know. And then comes this announcement out of President Trump. Now, we're adults, I hope, right? I think we are. But adults become completely spoiled crybabies when it comes to stock markets and trading. Believe me, I tell you, I know that. All right. And
Frank,
so, excuse me. Yes.
I'm not seeing any chart.
Oh, thank you for mentioning that, because I actually, thank you, sir, because I forgot to show the screen, and I don't know why. KBot and KBot did see that. Can't see the screen. I do apologize. Okay, now you guys should be able to see the screen. Sorry about that. I just had to switch one of the things on GoToMeeting because I have multiple screens here, so it wasn't set to the right screen. You can see the screen, sir?
No, I can't, Frank.
Well, you should be. Your system should be should be by now totally refreshed to the screen.
It says go to meeting.
No, sir. It is clearly showing the screen. And
Okay.
Mike is seeing that, and also KBot. KBot, you can see the screen. The screen is on. I've switched to screen monitor number 2. So on my end, sir, it is on the screen.
Oh, okay, I got it.
You got it?
No, I got the website now. All I got is website, your website, and go to meeting window.
Okay,
something's wrong with mine.
Okay, this is what you need to do. Not a big deal. You just need to sign out and sign in again. Just click the link again and sign back in, and you'll see it.
Okay.
Yeah, do that. So sign out.
Yeah.
And then sign in again. Just click the link again and sign in. You need to sign out. So I will basically.
Okay. Yep. Okay. Did that. Okay. I'm bringing up.
You're not signed.
I'm bringing up Clueless again.
No, you need to sign out of GoToMeeting. So I can sign you out, and then you can sign back in. But you do it on your end. That's better.
Okay. I don't know how to sign out, Frank.
Okay, what you do is just close the GoToMeeting box. On the right-hand side, just close it out.
The GoToMeeting box. Okay, close it out.
Check and see if that works.
Your system. Okay, I clicked on the close window.
Yeah, I guess that's what you got to do on your end. Yeah, and I can see you drop off from this side.
And I'm opening up again.
Yeah, but if you close it, I shouldn't be able to hear you. You're still connected.
Okay.
And then you go into that link, which I posted on the chat room. That's a separate window on my Clueless 8 website chat room, and you click that link again. Let me push you out from my end, and then click on that link. You know the link I'm talking about, the GoToMeeting link, and then re-sign back. So let me kick you. I mean, let me try to disconnect you from my end. Okay.
Okay.
Okay, he should be able to come in. So I will wait for that gentleman to come in. He's a new member, very passionate about everything. So we're just going to wait for that in a second. Thanks for pointing it out. I was so focused on explaining things, I didn't realize that I hadn't switched.
We're up.
Okay,
we're up.
That's good, sir. And you can see the screen.
Yeah.
Okay, perfect. Let me continue with my thought. I want to keep this brief and straight to the point. So the key is that this is where we were on. This is where we were looking fantastically technically solid right here. Looked like we were going to hit that 29.55 mark. All that good stuff. Then comes the President Trump's tweet bomb. Okay. Now keep in mind, we're used to President Trump's tweets. We know a lot of the times he plays a hard game of dealing with adversaries. In this case, an economic adversary. So we don't know exactly what is going on. I'm pretty smart at reading this stuff, so here are my theories. My theory is that he has now threatened. He has passed on the information to the Chinese that, look, don't kid around. You got to basically meet up with the demands and stuff, and let's get this thing done by Friday or so. And these threats are there for public consumption, so shows that, hey, I'm ready to do what needs to be done. Personally speaking, I think the Trump team overall has been doing a terrific job. I think they still are. I do believe that this China trade deal is something which I know, not just believe, I know is beneficial to both countries. And we don't need 500-point drops on the stock market, which is not going to help President Trump's re-election campaign. I'll certainly tell you that at this critical juncture. It is certainly not going to help any traders or investors who are sitting, saying, what the heck? We are getting a strong jobs number. Markets are improving. Look at this big move, all kinds of stuff. And then all of a sudden, we are basically back to the 2,900 mark. So it doesn't help anybody. This is the deal which is going to be beneficial to both of us. I think it helps China a lot more, and it certainly helps us. No question about it. We do not want to get into a full-fledged trade fight. We've already gone through that in the month of December, in the month of November, in the month of October. We do not need a replication of that. What I find objectionable, and as Clueless Aid Trading, the founder and creator of Clueless Aid Trading, I'll just make one comment. If these deal talks weren't really panning out the way it should be, there should have been no messaging on the part of the Trump administration, including President Trump, and I do take note of that, okay? I do object to that, in uplifting the expectations of the average U.S. investor, of traders, of anyone who has to do to do with the U.S. economy, that things are going that well that it should be done by Friday, and then all of a sudden drop a massive news bomb on Sunday afternoon. I think that's unfair. I think that's wrong. And I do object to that very strongly. No question about it. You cannot build up expectations like this and then all of a sudden say, you know what? Nah, it's not going well. Just don't say anything. Just stay quiet. Or just say, hey, things are progressing. It might take a little bit of time, but don't build up somebody's hope to that level and then just drop them. I think that's not right. And I think all of you deep down agree with me on that. All right, let's move on now. Saying all that, let's get prepared to what's going to happen on Monday morning. We're going to open like shit. All right, let me just point out this straight away. Excuse my French. And we're going to open down here at that 2,900 level again. We're at 2,890. Futures are up 50, down 55. Keep in mind that this is a game of high stakes poker. I don't subscribe to it, especially this expectations game. I don't subscribe to it. You want to play hardball games. Trust me, I'm a tough guy. All right, no problem with that. But don't be basically coming out with tweets on a Sunday afternoon while on Friday afternoon you're telling everybody everything's going great. So that's the only thing I object to. So because to me that's like fake news. So we didn't need fake news coming out of the trade team or in tweets either. Trust me, I'm as objective and fair as you can get. I don't care who does it. So the fact is that at this point, let's look to see. Here's another thing. We could get another tweet early tomorrow morning saying, hey, the Chinese basically have agreed to this, agreed to the things that I was objecting to. They're coming out of the White House. Guess what? Futures are going to be up 50 points. So we are in that stage right now of massive volatility. Completely unexpected. What is this tweet this afternoon, which is causing this massive drop, and this is not the first time we've seen it, mind you, okay? Massive drop on U.S. futures. Remember, this is futures. We're not trading right now. We're not trading till 9:30 tomorrow morning. It's a long way off. Okay, a lot of stuff can happen because the world is waking up on the other side right now while we're going to go to bed, right? So the fact is that there could be multiple developments that come along the way during the night. So saying all that, we as tactical traders, we have to look to see what our downside is, where things can bounce from, where things can break down to, and we move from there. So be prepared for a busy day. I know I am. And be prepared, in my opinion. I will do my best to make sure that we make money, long or short. Even though the current positions going into the positions going into from Friday after we took a whole bunch of profits and stuff. We also set up some positions for next week. Those are going to be, at least on paper, at the open down. So let's look at the opportunities of what might happen. So first of all, I'm going to start out by showing you a picture of the Thinkorswim E-minis, which will give us an indication of what's going on. Remember, charts speak. A picture, like that old Chinese proverb, right? A picture speaks 1,000 words. So bottom line is, this is where we are right now. We are seeing this red candle. This is worth 56 S&P points, roughly 400 plus negative Dow points. And we are resting, as you can see right here. I'm not zooming in. I'm just showing you. So you see the bigger picture. This was the high. This is what we were on Friday. This is what we were on the first. What day was the first? This is where we were on Wednesday. Then we pulled back Thursday and then Friday. This is where we were. Nice green candle moving up towards retesting the old highs. And this is where we are right now. So we are right now at a critical juncture from a technical standpoint, and that is we are retesting the orange line here, the 34-day moving average at around 28.86. Futures are at 28.87. This is one level of support. The next level of support comes in here at around, and you don't have to worry about these specific numbers. I'm just showing you the picture. The next level of support comes in at 28.72. So 28.72 would be futures down 70 points, which would be, big right there, this red line here. And the most critical level of support comes into play at 28.58. So 28.58 from here, let me map this out for you. Where we are right now, we're already down a lot. So on this candle. So 28.58, let me change the pen color to yellow so we can see that on this dark screen. From here to here, which is the uptrending 50-day moving average, is 28.57. So that's 28.57 to where we are right now. 28.90 is 33 points, right? 33 points?
Yes.
So this is 33 points. Okay. So 33 times approximately 7 or 8. We are talking another drop of roughly, I'm going to take the 7, I'm going to take the basically 7 number to be exact. We're talking another drop of about 231 points from where we are right now. After, if the market opened right now, tomorrow morning, we would be down maybe 400 to 450, about 400 points. So we would be down 6, and from there, to retest the 50-day moving average, which is a very critical support, would be another 231 points. So we open down approximately, let's say 400, and then we attempt to keep on sliding, and we'll short the market at that point. We break the 34, I'm shorting the market. Okay, so it's not going to be a straight line, but it can be, because at this point, what I forgot to mention is what we are waiting for is the official Chinese reaction. Remember, China knows good old Donald, my New York boy, very well. All right, he's dealt with them a long time. There's a lot of heavy-duty Chinese investors who have crap loads of money invested in the Trump organization. I'm a New Yorker, I know this. Go to the Trump buildings, they're all owned by the Chinese. So the billionaires, all right? It's nothing new. So they know what is exactly going on. So I am waiting to see whether or not, and the Chinese have not yet, bear with me 1 second. This is the real life Game of Thrones, right? So even though I don't really watch that show. So bottom line is that I just said it because it sounds cool. Right? So basically, I watch some other really cool shows. So it's more like Blacklist and all that. So saying all that is that I'm waiting to see what the Chinese reaction is. This is rumors out of Wall Street Journal, but they say a lot of garbage stuff too. That the Chinese are going to cancel out. The Chinese premier Hua, who was supposed to be here Friday, is canceling out his trip. We don't know that crap. So I'm monitoring the South China Morning Post, which is an app on the Apple iPhone. Best source of information, in my opinion. There's also other sources of information from mainland China, which I want to see what the exact Chinese comment is. I know it's going to be breaking into one of my iPhone if there is one. But aside from that, this report that China may withdraw from this week's trade talks, which would basically mean that we were going to drop down to the 50-day moving average, all right, for sure. So, but I'm waiting to see. And when it comes, I will certainly tweet out. So unless it's like well past 2 a.m. in the morning and I'm fast asleep, that's a different story. So bottom line is we don't have a reaction yet. So from a game theory poker standpoint, we'll see what they have to say. If they don't say anything, it's going to be mighty positive. You know why? That means that it's a lot of hot air coming out of the tweets, and that the Chinese are still going to come here and we're going to hammer out a deal. So that's the most critical thing. Want you all to understand that. So from a technical standpoint, this is the important part, the 2857 level. You might write that down somewhere. 2857. That's on the E-minis. That's on the dynamic 24/7 Globex futures market, 2857. And I'm obviously keeping an eye on that. But for now, believe it or not, I know it sounds kind of wild, even though I kept on saying the uptrend is intact. A lot of people might think this guy must be crazy. Well, I'm a little bit successfully crazy. How about that? Okay. So the bottom line is uptrend is still intact. Why? Because despite this big red candle, we are still holding the uptrending 34-day moving average. Yes, we have sliced through the blue line right here, which is the 20-day moving average. Yes. But we have, let me move this up because that's where we were. And you would notice from a mathematical standpoint, let me try to zoom in, that this candle is equal to this candle. See that? So you might wonder, what does that mean? What simply means is this could be a manipulated play on the heels of that tweet this afternoon for President Trump regarding increasing the tariffs and the threat of the talks breaking down. Well, he didn't say the talks are breaking down, mind you. I want to be clear about that. He simply said that they're going too slow. So this is an equal and opposite reaction. Not that we want to see that, but that's exactly what it is. The length of this move on Friday is equal to the length of this move. In other words, we gave back everything on Friday's gains if we open here. Just keep that in mind. So from a pure algorithmic high-frequency trading mathematical calculation. So saying all that, this is the level. Don't want to go into, explain it, don't want to get into it too much, but if we break the 50-day moving average, all hell's going to break loose. We're going to hit about 2,800, and we are certainly going to be making money on that. No question about it. What is the difficult part is if it held around here, unless we have a real directional bias, because we can't really react to the situation right now as non-futures traders, we are basically way at the mercy of the market opening tomorrow morning. But the fact is, you got to have cash on the side, just strategy. This is all strategy. Got to have some cash on the side. You got to react to the situation as it develops. And I'm certainly going to be working really hard, starting early in the morning to guide everybody. And we're going to have a solid week. Because one way or the other, my opinion is that, and Goldman Sachs, by the way, just now, reporting that there's a 40% chance, not an 80% chance. This is coming out of Goldman Sachs. And they got their tentacles all the way around the world, They got big shot guys, sitting around giving the source of information. But Goldman Sachs right now just said that there's only a 40% chance of the U.S.-China trade deal breaking down. 40% is I'll take 40%. I'll take 40%. Not that I'm saying that they're going to be exactly right, but 40% is a low number, right? You do all agree with me. 40% chance that the deal is going to break down. Okay, so keeping all the hysteria and the drama aside, this is the E-mini futures, and here is something I'm getting excited about. Okay, and that is that this is what we are. This is what we were on Friday. So let me just zoom in. There we go. This is what we were on Friday. Beautiful bullish green candle. This is where we are on the drop right now, and we are retesting this uptrending channel. These two magenta lines or pink lines, whatever, right there. And we are at the bottom of it. Here's your 50-day moving average right there. Still uptrending nicely. What I'm getting excited about is looking at the internals. Okay, so let me just zoom up. Expand it. This is what I'm excited about. Why? Because I live and breathe the stochastics. You guys should know by now. Because those stochastics has made us a significant amount of money and has given us some clues or predictive signals as to what might happen. What happens when the stochastics it basically took a cliff dive. It's like, diving off one of the cliffs in Maine or in the Bahamas or somewhere, right? So right now. We did a cliff dive on futures being down 62. So this is good. Why? That means things are getting severely oversold on this panic reaction in futures, mind you. And it's not that heavy a futures market out there because the Japan markets are still closed for 10 days. I think they're opening tomorrow evening or Tuesday. I can't remember, but they're a 10-day holiday. So it's kind of a thin liquidity market. There are not that many participants out there in the world. I'm talking about the Globex futures, guys. So the point is that we are taking a nosedive, and if we get truly oversold at these levels, I don't care whether the China trade talk is going to work or not, but immediately within either intraday or within 1 day, which is 24 hours, we're going to get a face-ripping reflex bounce. That reflex bounce, what we call a reflex rally over a significantly deep oversold condition, which we are seeing on the daily. Remember, this is a daily chart. It's not a 1 hour chart, 15-minute chart where things get oversold every 15 minutes, every hour. This is the daily chart, ladies and gentlemen. This is the serious stuff. So the daily chart is getting severely oversold. You can see that right here. Very easy to see. And that creates it's going to happen very fast. We're going to see a sharp bounce. And whether that bounce fails or not, we shall see. And that sharp bounce could be anywhere from 100 to 200 points. Now, if this thing it's kind of a head fake, and President Trump is basically playing that hardcore card of head faking the Chinese by issuing these monster threats at this critical juncture after telling the world and the U.S. public that everything is going fantastic till Friday, then and if he's head faking in a hard way, then he's going to show his cards and we will get the deal done, and you should expect to see a significant bounce. Now, that bounce, one way or the other, could come off the 50-day moving average. That's my opinion. So we will still have some push towards the 50-day, because if we are getting this close to the 50-day moving average, like 213 points after opening down 400 points tomorrow, why not just frigging get the retest done? I'm dead serious. So all the technicians can say, you know what? We tested the 50-day moving average. Come on, and we bounced off that. So this means the market really is a bull market. But if we break the 50-day, then we have this zone to cover. And of course, I'll be guiding you people through that. Okay? It's nothing that crazy. These are all numbers. You just have to, know what they are. So can we slip and slide directly into the 50-day moving average and then bounce from there? Yes, absolutely. So there is a very strong possibility. Now, in the meantime, this is exciting because we are basically now severely oversold on a technical basis as we speak on this eventful evening on Sunday, on the 5th of May at 9:10 p.m. Let's take a look at the 15-minute charts. This is the 15-minute charts. Obviously, we have basically gone below. This was our Fibonacci retracement that I retraced and traded. We retraced and traded. This was the big flash crash because of the Fed, the 10-year government bond prices shooting up. Shooting down as yields went up. Explained all that on the previous webinar. Then this on Thursday. Then this massive rally on Friday. So now we have retraced back all that. And because of the thin liquidity out there, because of the panic that's ensuing, and I'll be monitoring developments right after I finish this session. And it's, a lot of stuff I do on the background because I love doing this and I love helping you guys to stay informed. We're basically broken down. So saying all that, let me draw another line to see whether or not, where we can come down to. Bear with me 1 second. Yeah, you guys will see some technical magic again. And I shall do this. Remember, this was the falling wedge on this past week, which worked out. Remember, here's your falling wedge that I even wrote down. This was falling wedge. This was the big breakout on Friday. So now we are going to draw this. Bear with me. 1, 2. Bingo. So what does that project down to? Because if you want to look at it from this being a very large channel, then let's see what the lower end of this channel is. Lower end of this channel This was the big arrow from where we basically bounced off from. So we leave that alone for now. The lower end of the channel is 28.65. We're at 28.85. That's another 20 points. Can that be filled by the time you take your nice cup of tea or hot milk before you hit bed? Yes, we could fall another 20 S&P points. And the S&P futures, we've gone through this before. We went into 2018. 2016, 2018, when the volatility futures used to be down. Remember, like 80, 100 points, like, wow. So I got to use some cliff diving here. So bottom line is that you're looking at another 20 points. Can futures be down 80 handles? It's down 61 handles right now. Sure. Will there be like screaming heads and talking heads who have no freaking idea what these technicals are all about on TV saying, oh my God, the world's ending and everything? Will some of you just be like, oh my God, I can't take this anymore? You know, I'm not even invested, but I'm still like completely like scared. I'm like running for adult diapers. Well, the fact is, yes, some of you will be like that. But this is an opportunity, because if this poker game plays out, and I'll certainly be the first one to alert you, then you will have the other opportunity. Like my good friend Mike H mentioned on a DM on thing, to buy some of these great companies like Alibaba and Apple and all this that you didn't buy in the last 10 days. Okay, so this will be another one of those perfect moments where the prices will land on your doorstep. Looks a thud at a 30 at a 10-15% discount, and you'll be like, no, I don't really want it. You know, okay, great. And then within 5 days, what 5 days? Within 24 to 48 hours, they'll be up a gazillion points. Options will be up 300%, and you'll be like, oh man, why didn't I do it? So it's just like, exactly, it's just like an ongoing story. So my job, my responsibility, I shouldn't say my responsibility, but my job as a trading creator and founder, as a head trader here, I will be trying to guide you guys as quickly as possible. If there's a breakdown, we'll go short. If I'm starting to see a reflex bounce, I will certainly be informing, obviously. Now keep in mind that these movements are going to be swift, fast, and furious. Unless in a news vacuum. Remember, the news vacuum is, we heard our part of the news coming out of President Trump, okay, his threats. Now, what is coming out of the other side? That is the other part of the equation that I need to know. We need to know, and the biggest players in the world need to know right now. So anyway, so can we move down here to the bottom end of the channel and then make a bounce? That bounce going back to 2,900. Now that we have broken below 2,900, absolutely, absolutely. In fact, if you look at this here, if this was a downtrend channel, it is a downtrend channel, then this is what we did. So if you really think about it, if Friday didn't happen, then we would have gone here, fallen here, come here, fallen there. So now, if things are really unraveling and China does cancel trade talk and stuff, then we are going to basically go into a tailspin. And we're going to make money on that, believe me. As long as you have a directional bias, you're going to make money on that. And that means that the market will correct itself anywhere from 5+%. And, we can go quite a bit lower. And I already showed you on the E-mini charts where we can go. So let's take a look at that again. And I'm going to pull out the S&P 500 chart in this case. And it is right here. Ladies and gentlemen, let me get all these squigglies out. So this is where we are right now. Remember, the S&P 500 does not trade itself on a after hours, right? That's a fixed. The derivative of the S&P 500, which is the futures, the E-minis trade after hours. That's why this is a static chart, a beautiful technical chart, wanting to make a new high as of Friday afternoon, 4 o'clock. Okay. So as of now, we are down here retesting the 34-day moving average. So let me get the. So this is where we are right now, somewhere in this zone. This is the 50-day moving average. If we break down fast and furious, the next level of major support comes in at 2,800. Very easy to remember. Remember, first level of support was 2,900, and if things break down below the 34 and the 50, then the next level of support comes in at 2,800. If we break 2,800, we have a phenomenal support at around the 27. And it's all in these charts that I'll be putting out there tomorrow, first thing in the morning, for you all to see. And you can basically just write these numbers down or replicate them on your screen. So this is the final level of massive support at 2,700. Now that's a lot of points down. That's like the hell in the handbasket, like no deal, full-scale trade war. Okay, this and that. I'm not a perma bear. I'm not a perma bull. We are in a technical bull market. We had an incident this afternoon with the tweet coming out of good old President Trump regarding the threats. Chinese haven't said anything as far as I can see, so we shall see. So these uptrending lines are still intact, but if all hell breaks loose, then there's an opportunity to make some substantial money just buying the SPY puts. You don't need to be a rocket scientist, okay? You don't need to sit there and say, okay, what is he thinking? Just frigging short the market, okay? And of course, my 1 hour, 15-minute charts will guide the active traders during the day what they need to do. So that's it. Now, so this is where we are. I explained to you what's going on. There's nothing to say. This is the daily chart I just showed you. We have very successfully traded this. This is your 50-day moving average. This is the one. This is the Fibonacci chart, right? So this has worked beautifully well for us. Remember, this is your 50 Fibonacci level on a massive crash, pullbacks in the market or pull up on the markets. We always come back and test the 50 Fibonacci level. At this point, believe it or not, the market is still, as we speak, as the reporters would like to help us believe that the aliens have completely invaded and the Mayan invasion has finally come and we're all finished. I used to joke around about that back in the days. And we are all being lifted in a strange spaceship out there into the black hole. That's what the reporters would like to have you believe, as you all know that. Believe it or not, we are just here. We are right here. So that's pretty much where we are. So we're still holding this big box. And let me try to go back and draw a new chart which will help us figure out where we are. So before you all get abducted in some strange alien ship into the black hole in the universe, in the galaxy, and you come out on the other side like a superhuman or maybe I don't know, like what? Let me explain to you what is on the 1 hour chart. Okay, so here's your 1 hour chart going back to a significant low in the market, and that was on the 8th of March. 8th of March. Okay, not too long ago. It was just like when you were 1 month younger, okay, or 2 months younger. On the 8th of March, all of us were 2 months younger, right? So let's do a Fibonacci retracement on that fateful day of from March 8th, and we will do this, and you'll see how accurate these things are. So right there, perfect, and right there, perfect. So what did I do? I touched a significant bottom on March 8th when we were at 27.24 on the E-minis, and touched the top on Friday. Not Friday, on the 30th. And this is where we are right now. Everyone with me so far? The next thing we're going to do is we're going to draw an uptrend line. Watch this magic happen. And we're going to say exactly, give or take a few points, where we'll land up. Extend it. Bingo. Bingo. All right. Now we're starting to know. This was the naked chart. That was the emperor without clothes. And now we're going to put some nice clothes on the emperor. Okay, so figure out what's going on. So that's exactly what we're doing. Now, that's your uptrend line. A very simple, powerful uptrend line. That uptrend line, as of now, in the overnight session, has been broken below 29.32. Let's take a next line here. Is the 50 Fibonacci retracement, giving back 50% of this massive move from March 8th. That's why we call, that's why it's called the 50 Fibonacci retracement. So let's make this visible. And we are going to, right there. Where is that? At 28.42. So from where we are right now, that's roughly another 45 points multiplied by 7. That's another 300 Dow points roughly. from here to here. Is it possible that we hit the 50 Fibonacci level given the vacuum of news coming out of China and the uncertainty that has developed since this afternoon? Yes. Because if we follow strict technical discipline, and given what has occurred, then we should expect to see a 50% retracement, or 50 as we call it, of this massive move since March 8th. So this is your consolidation channel. One second. There we go. Drawing this. This is going to be the creation of another chart that you guys will be following, tracking, starting tomorrow. So I'm doing it right in front of you. We have some. Where are the other Fibonacci retracements? The next one is 61.8. This is all money. Everything that I'm showing here is going to either help you make money as we put out the trades tomorrow, and we're not going to be doing crazy trades like right off the bat. I want to see how the market is reacting, and so I'm not going to be like every 5 minutes, shooting out a trade. I want to be smart about this, but I do not also want to be at the same time be in a state of analysis paralysis, which I do not believe in, which a lot of you subscribe to. Okay, too much analysis. Oh my God, is it gonna frigging just take the trade based on the charts and then make some money? Because too much analysis paralysis, which is also a disease that was very common back on my days on Wall Street. You had a lot of analysts always overthinking things, and a lot of money managers, institutional managers that I came in contact with overthinking things and never made money. So you gotta act. You always have to act. You don't have to act impulsively, but you have to act. Like they say, if you don't try, you'll never do anything. And unfortunately, that's a disease that is very pervasive to individual investors and even institutional investors and traders. So these are your Fibonacci levels, okay? Immediate ones that we're looking at. The 51 is the most important one. And of course, these are the lower ones. This should be in red, because once you break the 50 Fibonacci, you are going to be looking at red lines. So that's your border. That's your big thing, 2842. So at this point, realistically speaking, one second. There we go. This is actually a pretty decent looking chart as in mapping out what's going to happen. So this is what we're going to be looking at. So this is after the big move. This is your extreme pullback that can occur within the first hour or two. Real move down. Market's down 600-700 points. Do not panic. I'll be putting out some important tweets, whether to get out of existing positions, take the loss as it stands, and then re-entering, or sit tight. And if we start at each of these levels that the market's going to hit, you will see a attempt to bounce. It always does that, attempt to bounce. The first Fibonacci is 2869, which is about 20 points lower from here. If it hits that, the markets will attempt to bounce. If it truly wants to go down, it'll fail and come down. If it hits the 50, I don't think it's going to hit the 50 right at the open. Might do that if we get a very strongly worded FU statement coming out of China. We're going to fall harder. Okay, I don't think that's going on. I think the talks have progressed substantially, and I think they didn't want to unwind everything. That's my opinion, as a logical adult thinker. So anyway, so bottom line is there's a gap here. Believe it or not, I identified a gap, and that gap also happens to be at the 2841 level. So extreme scenario of 2841, you will see a pretty substantial bounce on the markets. So this is where we stand right now. I do not want to overanalyze what's going on. And there are really no answers, as in what exactly is coming, because the answers will depend on the comments coming out of both parties. We heard one party, our party. Let's hear from the other side. I don't think the trade talks are going to be canceled full blast. I think there's back and forth. Now, here's the big piece of news that I'm going to leave you guys with. This could be one heck of a poker game hoax that good old President Trump is playing. And if that's the case, ladies and gentlemen, the market will give you a phenomenal, like I said earlier, buying opportunity, which any of you If you miss, and of course I will put in my, not 2 cents, I'll be putting in my 200 cents in analyzing all this information and passing it on to you from all the different sources. And I have a pretty good track record, pretty terrific track record of analyzing the information, not what it looks like in black and white when it comes out, but what it really means. And if some of you just sit around and do nothing before we get that substantial bounce, then you should retire yourself as a trader. I'm dead serious, okay? Because the bounce could be very substantial. Now, saying all that, we are on a serious note. We are in a level of deep uncertainty at this point. Futures are already bounced about 7 points. We were down 65, we're down 57. You can see that little green candle is a 7-point. This is a live chart, right? 7-point move on futures. So that's it. So I want to get some rest. More importantly, I'm not worried about my rest. I want to monitor what's going on. I'll be checking many different sources as right after we finish with this. Keep an eye on the Twitter feed. Some of you might know that you can get direct Twitter feeds directly by putting your mobile number on the settings on your Twitter site, so you get an immediate blast if you are, if you do want to stay connected. Or in the meantime, just try to get some sleep. Let's go to work tomorrow, one with the other. We have won overall. We're going to win again, and I'm not talking about the trade war and stuff. That we're going to work that out. I'm talking about here at Clueless A Trading. But you got to be vigilant. This is real tactical warfare on the charts that's going on. The noise is there, but the charts will tell us what exactly is the real story. But technically speaking, it is a breakdown. On a swing long-term basis, nothing really broke down, as I showed you guys, honestly speaking. But on a short-term basis, yes, it is a technical breakdown, and you can see that happening right here. Let's take a look at the 1-hour chart. There we are, and this is the interesting part. This is your 1-hour chart of the S&P 500. This is from the 9th of April. 9th of April, about a month ago, right here. Look what it's doing. We have already recovered. I know it sounds like, wow, the futures are down 57, and Clueless A Trading Frank is saying we've already recovered. The guy must be out of his mind. Yes, I'm out of my mind, but I'm a successful out of mind kind of guy. So bottom line is that this is pretty interesting, that we are actually creating a hammer, which at length, and I'm not going to call it a very long tail hammer, but it's a hammer on a 1-hour basis. So if you're a futures trader right now, which we have a bunch of them in our group, who will be listening to this, you'll be looking at this and saying, you know what? I just made myself from 28.83 to 28.91. I just made myself 9 points. You've got 9 handles on this hammer. So the key is we are deeply oversold. This is a fast-moving market. This could suddenly turn blood red again and go down. But this is interesting to see that on a 1-hour basis, and I can't wait to end this session, not because I want to run away from you lovely people, is because I want to start monitoring what exactly is going on the other side. This is exciting stuff. Remember, it's a big soap opera, right? So I want to know what the next episode is. So, or try to decipher what the next episode is, right? That's where the strength comes in. So this is where we are. So this level here, this support level here at 28.74, you can see what's going on. Now, is this the first time we have dropped like this? Yeah, first time in a while. But we also fell very hard intraday on Wednesday. Look how big it was. So this one is the same length. So, at least I can see a structure developing. All right, on that note, I will see you guys first thing tomorrow morning. Let's keep it going, and thank you for attending. God bless you all. The roadmap is out. It has to be tweaked as we move along. And this is a critical juncture for U.S.-China trade relations. And I've already explained what my thoughts are on that. And I do believe that it'll get done. But in the meantime, get ready for some volatility. And it's nothing to be truly scared about. Are you supposed to be feeling good about it? No. On the long positions, are you feeling like, oh my God, my world just ended? No. And you need to be engaged. If you have time during the day, you're going to have some great trading opportunities. If you're busy during the day, if I'm putting out some swing setups based on the information flow, based on the charts, then take those swing setups and sit tight. And in the meantime, certainly one thing you all have to do is just monitor the real-time Twitter feed. That's the best source of information, both for trades, charts, and comments than anywhere out there that you'll find. Have a blessed evening. See you guys first thing tomorrow morning. Good night.